Good afternoon. It's Chris Robbins and Rob Zelli Marketing with today's post-close grain and livestock comments. Well, interesting day. I'd say the driver continues to be this idea that there's going to be a big push for E15 year-round blending. Right now, that's voluntary. It's not a mandate. Voluntary year-round sales of E15 will help, um, but it's not. I don't think it's the be-all and end-all that a lot of people think it is. It's a longer term. We still have um, a lot more corn to chew through. So anyhow, we'll see over a period of like 5 or 10 years, it might chew through um, more corn than we have right now. Right now, there's about 5 billion going to ethanol and stuff like that. Maybe, but I don't see it happening immediately. So I could be wrong, but I think you also had the push up in bean oil to 5 month highs. That was probably a big driver. But we've seen that fizzle before. Remember, just 2 months ago, it fizzled because they said, no, we're not going to talk about it for 2 months. So I just, I hate to be a devil's advocate, but I want to see, a year-round mandate that's for real, as opposed to just people speculating, well, this is going to happen or that's going to happen. So maybe I'm wrong. Anyhow, at the end of the day, it did give us a bump up. Corn managed 3 cents higher. Beans, after being up sharply higher overnight, and we're starting to see that, right? We're rallying overnight. It's like the Asians and the Europeans are buying beans at night. We come in the morning and we sell off. I don't know if that's a pattern or that's going to continue, but something I've noticed here in the past week or so. So for the day, March corn finished up 3.5 cents at 4.30. D's corn finished up 3.5 cents at 4.57 and 3/4. Corn is still below where we were at the beginning of the year. You did have new 1 month highs for both beans and wheat. So we'll see. Beans broke through a trend line. Talk about that stuff a lot. When a market doesn't have headlines to trade off of, demand or weather or something like that, we start trading off these technical levels. You've got the March corn dancing around the 100-day, 200-day moving average. Keep watching that. If you watch March corn, it's nice to see us up here again. The number one number that I would look at would be the 200-day moving average, because that's the one that the long-term trend following speculators look at. And, that's up at 442, 443, which is 13 cents away. So we'll see. Any port in a storm, though. I'll take a rally. We'll see if there's any legs to it at all. It was a whippy Wednesday. I think a lot of people were surprised that beans opened on their high and just drifted lower. Finally caught a little bit of a bid at the end of the day, but not what we typically see. There wasn't a lot of buying coming in at the end of the day. I want to see what happens here tonight. In the livestock, new highs. We finally broke through all that resistance, those recent 3 month highs. If you look at fat cattle, it got to 239. That was the high print today. It did not quite take out the January 13th high. It missed it by 0.05 cents, but it's still the type of action you want to see. It is the highest prices we've had since the middle of October. So I'm just going to go ahead and call that a new 3 month high. There's some targets there, but good action in the cattle. Cattle looks like it's trying to break through this wall that we've been in here. We've kind of been hanging fire here for about a week and a half. March feeder did make a new high for the move. We poked their head above 365. We traded as high as 366.20. Again, the highest price since October 22nd. Everybody now is very jazzed about possibly going up and going to get that last gap at 370, going all the way back to the October 17th. There's a gap up there at 370.675 and roughly gets filled at 375. So can we do it the next 2 days? I sure do hope so. The interesting move in the lean hogs. Lean hogs did make a new high from the move, but then that was yesterday. And today there's actually a gap, a little bit of a gap on the chart lower. So we settled lower, opened lower, settled lower. For clients that work with me, I was able to roll up a lot of those puts. We sort of were waiting for a day like this to maybe say that the high was in. I know personally I was able to spend $1 and roll puts up out in June. We rolled up, I think, $6 for $1. So a good chance to roll up your floor if you wanted to. That was just one example where you would try and do that. Why would you do that? Well, if you can buy $6, right, on a put. If we ever did collapse and rolled up and were able to roll down $6, that puts us in a position potentially to get, we get 70% of that $6. You spend $1 to possibly get 420 if we correct. That's a good use of your money. So that's the way I would have approached these rolling up puts. You can do that across the board in cattle as well. I mean, good Lord, you could pay $2 and go up 15, 20, $25 in some of these cattle options on the move that we just had. So roll them up, roll them up, roll them up, because sooner or later it's going to correct. I don't know when. Um, Watching the silver market, a lot of guys are interested in that right now because it's the highest it's ever been. It took out $1, now it's trading 117. The problem with silver is it has $6 or $7 backdrafts where it just collapses, and everybody thinks, is this the top? Is this where it's going to stop? So lots of opportunity, but I think you've got to be very, very careful with your risk there, no matter what you're doing. If you buy it or sell it, I think you're risking $6 every time. Crude oil did pop through a big technical level today. I had that in my letter as well. It's hard to believe that back in June, when we were going at it with Iran, we traded as high, just above $78, right? And a lot of people on TV were saying, "Oh, here we go, we're going to the moon because of Iran." We went from $78 to $55. In fact, just recently we traded below $55, which was a 5-year low. That didn't get much attention in the TV, but this spiked to 63, almost $64, the highest price we've had since September. So a 4-month high, that's going to get people's attention. So we've gone from not caring about oil companies to, it'll only be a matter of time if we really spike higher. I will say this: if you look at that move from 78 down to 55, the 64 area is pretty key. It's a 38% retracement of that move. If we can get to 66, 67, that will be halfway back. But I don't expect we're going to go vertically higher. Really, nothing's changed. It just feels like technical stuff to me. And that can be the hardest to trade. I mean, there's all kind of targets up there if we really get going. But right now, we are at the 38% retracement there for crude oil. And if you've been following my letter, when we were down at those 7-month lows in diesel, heating oil futures, I wasn't calling the bottom because I'm not psychic, but I did say, hey, you know what? We just went from 371 to 305. Might want to look at something. Little did I know, I certainly did not know that we would turn right around and go back up to 270, which is what we've done here. So between November 19th and let's see where the low was, January 7th. So just 2 weeks ago, we dropped. Now we've, in a matter of a few days, 10, 12 days, we've completely rallied back. So very, very dicey trade there. We'll see what happens. But that's why we try and hedge. And again, nobody calls bottoms. Nobody calls tops. When you get those moves, though, where it collapses to 6, 7, 8-month lows, again, diesel went down to the lowest price we'd had since June of last year. So that was a pretty good low. 6-month low, 7-month low, and then boom, right back at it. So we'll see if we get more volatility moving on. This is Chris Robinson, Robinson Ag Marketing. Again, this program is about helping you do one thing if you're a farmer or producer, helping you stay in position so you can sell when you want to sell, not when you feel like you have to sell. We do use hedges as defensive trades. If I put a hedge on, it's not because I wanted to make money. It's not a trading program where like, hey, give me $1, we're going to make $1 million. That's bananas. What we try and do is say you're a farmer or producer, you're always bet long. What do you do when beans rally $1.50? Well, what do you do when beans break $1.50? What do you do when corn um, is stuck in a 35 or 40 cent range? It doesn't give you a lot of chance to do anything. That's why we hedge because, again, what we're trying to do is sell our grain when we want to sell our grain. All right, this is Chris Robinson, 312-638-8868. If you're not getting my letter, go to robinsonagmarketing.com. I did make a change this year. It is $50 a month. Most people that do what I do charge anywhere from $50 a month to 60, 70, 80. Some guys are more expensive. $50 a month for me seems pretty reasonable. I send out 6 letters a week. I do a weekly 20-minute breakdown chart podcast. I also do these twice a day for free. So I try and stay on top of this stuff for you. I do the homework. I put the levels out there. You get to make decisions based on the levels that I'm looking at. I do also provide specific hedges for clients that work with me. It's soup to nuts where I help them pick the hedge, manage the hedge. So for somebody out there, if you'd like to learn more about hedging, but you don't know a lot, I work with a lot of guys that have never hedged before with options. And again, my program is turnkey. I have not reinvented the wheel. I did not have, ESP. What I try and do is help manage your position so that you can make cash sales when you want to make cash sales. I think that's what this program is all about. So if that's something like you'd be interested in, again, take a look at my letter. It's $50 a month, or if you buy the entire year, it had been $500 a year. I dropped it to $450. So we dropped it by 10%. If you buy the whole year, basically you save 25%. And cancel at any time, especially the month to month. So I'm trying to put as much information out there as I can. And I know this is a tough year, which is why I made the decision to lower the price of that information. If you go month to month, I think $50 is a pretty fair amount for the amount of work I do. I do spend a couple hours in the morning. Every weekend, I spend about 4 hours doing a weekly wrap. And then, of course, I do the about a 20, 25-minute podcast where it's basically a class on technical analysis and how it's applying to current grain and livestock, so and other commodities as well. So, all right, thank you very much. This is Chris. Have a good night. We'll be right back at it tomorrow morning. Take care.